So if you don't already know, I'm taking a break from trading until I get some capital, and I'm considering a few strategies like zero DTE or earnings trade, in and out from earnings without rolling, without saving the trade. So when I had a bit of buying power, I played DOCU earnings trade. I did a naked put on earnings on DOCU for earnings. It was trading at around what was it trading at? I think it was trading at around 90. So before earnings, I'm pretty sure it was at, oh yeah, it was at 88, 87. So let's look at 5 days. So yeah, it was trading at around 88. Expected move was around 12, 13 points. So I went to the 74 put, and that's a strategy that I'm looking into, selling a naked put, out of the money naked put at expected move. But this time, not trying to save it, not trying to roll it, just accept whatever it's worth the next day. But I'm hoping in the long run, the more I do it, overall, it's a profitable strategy. I've been paper trading it for a bit, and besides Netflix and Amazon, which I don't think happen often, obviously Netflix would have been a $5,000 loss, Amazon would have been a $10,000 loss, so that would have wiped all the profits. But last week or the week before was a $1,600 profit. This week Coupa was a winner of about $200, and then DOCU was a loser of about, well, in my case, it was a loser of about $649. So the first trade that I actually do instead of just paper trading happens to be a loser. I don't know what's wrong with my luck here. But yeah, anyways, I'm going to continue with it. I think next week there isn't much earnings. If I go to earning stats here, earningstats.com. Next week, I think there's Adobe next week. If I have the buying power, I would play Adobe, but I don't have the buying power for Adobe. But it's going to be part of my paper trade for sure. So earnings calendar, June 16. So yeah, next week we've got Adobe, and then the following week we've got Accenture and FedEx. I'm probably not going to play Accenture, but I'll play FedEx. And then Nike for sure I'll play. And then JP Morgan maybe. Although financial stocks don't have that much volatility. So my short put wouldn't be that far. But maybe, we'll see. And the plan is not to roll, not to save, just take the loss and hope that there's enough winners to compensate for those exaggerated losers that happen. Maybe lately they're happening a lot, but generally speaking they don't happen that often. The reason I say that is if I look at, let's look at anything. Let's look at Apple, for example. If I look at the actual versus expected here for Apple, for the past earnings. So you can see from the last, how many earnings is this? It doesn't say over here. Actually, it should say somewhere. But you can see since 2005 or even before 2005, you want to look at how many times the red bar went outside of the gray area. So it did happen. It happened once, twice, 1, 2, 3, 4, 5, 6, 7, 8. It happened, or even 9 times. It happened about 9 times. But out of how many earnings we've got? Let's go to another section to show how many earnings. Let's go to dashboard. So we've got over here, maybe not dashboard, but stock stats maybe. Yeah, let's look at stock stats. So it's 78 earnings. Out of 78 earnings, it only went outside of expected move on the downside. Whatever I just said here, actual versus expected. So out of 78, it went outside of expected move 1, 2, 3, 4, 5, 6, 7, 8, 8 times. So imagine if I had sold a naked out of the money put at expected move all 78 times. I would have won 70 times, regardless of what the premium is. That's the thing. I don't know what the premium collected would have been. It'll be different every time, depending on what the stock price is, depending on the volatility on the stock. But I would have won 70 times. I would have lost 8 times. And also the losers, I don't know how much I would have lost because I don't know how far the stock would have gone down. But I think overall, because of charts like this is why I want to try out this strategy in the long run. And because I don't want a strategy where I'm involved, where it makes me stay in the market more than a day, because I don't trust this market anymore. It's completely manipulated in my opinion. So I don't want to stay. I don't have a trade where I'm exposed to the market for a month, for example, and then I'm forced to manage. I'd rather be in and out same day, 0 DTE, or an earnings trade where there's nothing I can control. That even in crashing markets, earning trades can still be winners. In fact, in crashing markets, volatility will be higher, so earning trades are even better because you might go even further. And if the stock has good earnings, then it'll probably go up or even move a little bit, and your out of the money put is still a winner. So that's why I want to try out this trade. I just happened the first time that I try it, not paper trade, ends up being a loser. But I'll continue. Alright, so just wanted to share this quick trade here with you. If you have any questions, leave in the comment section below. Also check out the referral links below. If you want to open an account with Questrade to trade on the stock market, use the referral link below to get $50 in free commissions. Thanks for watching.